Welcome back to Wealthstone. I'm Greg Shaw, here with your March market update. You could even say March Madness update. If you've been watching the markets lately, you may have noticed things are looking a little shaky. We've got volatility, tariffs talks, and even the potential of a snap federal election here in Canada. In short, there's a lot going on. But before you hit the panic button, let's break it down and talk about why this pullback may not be as scary as it seems. Today, we'll cover 1, how major markets have performed year to date, 2, why tariffs are making headlines and why you shouldn't get too worked up just yet, and 3, what's happening in Canada, from rising inflation to a possible federal election. Let's dive in. First, let's talk about the markets. If you're feeling a little uneasy looking at all the noise on social media and the news, you're not alone. So far this month, we've definitely seen some turbulence. At the time of recording, the Nasdaq is down 6.8% year to date, thanks to a sell-off in tech stocks. The S&P 500 is down about 4%, halfway to correction territory. And here at home, the TSX is actually up 0.2%, pretty much flat for the year. Now, I know what you're thinking. Is this the start of something much bigger? But before we jump to conclusions, it's important to remember that market corrections, defined as a drop of 10% or more, are actually pretty common. In fact, they happen on average every 12 to 18 months. Think of it a little like spring cleaning for the markets. Prices pull back, valuations reset, and we clear the way for future growth. So while things may look messy right now, it doesn't mean the sky is falling. Sometimes you just gotta weather the storm to get to the sunshine. One of the big reasons we're seeing volatility right now is, you guessed it, trade policy uncertainty. With Trump back in office, there's a constant stream of news articles, headlines, and memes in everyone's social media feed. Yes, I've seen some of your posts. And while it's easy to get caught up in the media frenzy, here's the truth. We still don't know which tariffs, if any, will actually go into effect. As one quote I heard recently puts it, sometimes to make a really good omelet, you've got to break a few eggs. Right now, we're in the egg breaking phase. Things look messy, there's a lot of noise, and it's hard to tell what's really happening. But once the dust settles, we may end up with a policy framework that supports long-term growth. Until we have more clarity, the best thing you can do is to focus on the facts, not the headline. Remember, the media's job is to sell advertising, not to give you long-term financial advice. Turning to Canada, we've got a couple things to watch on this side of the border too. First, inflation. February's inflation rate ticked up to 2.6%, driven mostly by higher energy costs and, interestingly enough, the end of the GST tax break. Amazing to think how taxes can actually affect inflation numbers. Second, we may be heading towards a snap federal election, possibly as early as late April. The political landscape is shifting, and depending on the outcome, we could see changes to tax policy, House regulations, and fiscal spending. Regardless of who gets elected this spring, I'm excited to have somebody new taking the helm that will be a catalyst to move Canada in a new direction. Change is good. So, what's the key takeaway this month? Don't panic, don't overreact, and don't let short-term noise distract you from your long-term goals. Yes, markets are flirting with correction territory. Yes, we're hearing a lot of talk of tariffs and elections, but remember, corrections are normal, tariffs are uncertain, and Canada's economy is more resilient than you might think. I still believe we'll see recovery later this year, and I remain bullish for 2025. So stay patient, stay diversified, and stay invested. As always, if you have any questions about your portfolio or the markets, feel free to reach out. And if you found this video helpful, don't forget to like, subscribe, and share it with anyone who might benefit. Thanks for watching. We'll see you next time for more financial insights. Take care.